All right, here we go. Easy funding real estate portfolio / blanket loans. Let's get started. So in case you didn't even know real estate blanket loans or portfolio loans even existed, I'm going to tell you all about them today in this video. We're going to get into the definition of blanket loans, how they work, and then how you can get started if you like what we have to say here. So essentially the definition of a real estate portfolio loan is very simple. Just like it sounds, it's a blanket loan or one loan that covers multiple properties. It works for stabilized properties only, so there's no rehab, no construction. We've been talking a lot about that here on the channel. For this particular product, we're only talking about stabilized properties. It works for 1 to 4 units, condos, townhomes, and multifamily. And in order to qualify, you need at least 5 units in the above categories. So it can work in any of the above categories. You can cross them up. So for instance, if you have 2 houses and 3 condos, let's say, that could potentially qualify for the blanket loan. Location proximity is not required. So in other words, you can blanket properties across states. They don't have to be next door to each other or attached or anything like that. Okay, so how does this work? Well, the first thing you need if you're going to look to get a blanket loan or a portfolio loan is you need what's called a data tape. And a data tape, quite simply, I have an example here on the screen. This is just a sample piece of a data tape. I couldn't fit it all in here, but if I was to go across, you would see that there's a lot of information that's asked about each property. So essentially, you're going to list out all of your properties, and then you're going to give the information specific to a data tape required by the lender so that they can underwrite for the blanket portfolio loan. Once you have your data tape, then you're going to furnish information about yourself or the borrowing entity or the partners in the borrowing entity. We're going to be looking for things like your net worth, your liquidity, your credit, your experience, etc. So all the typical things that you're going to have to provide when you get a loan, they're all found here as well. I think the main unique thing about this one is that data tape that I just mentioned. Once you're pre-qualified, you're going to typically find the following things to be pretty universal when it comes to the qualification. They're going to vary slightly from lender to lender, from program to program. This is just sort of a overall what's typical. So 75% loan to value. There are some seasoning requirements that you're probably going to bump up against. And when I say seasoning requirements, what I mean there is, let's say you bought 10 houses, you rehabbed all 10, and it only took you 6 months. And now you're sitting there 6 months later, you've got them all stabilized and rented out, and you want to put them into a blanket loan, one single loan. There are going to be requirements that are going to be put out there by the lender that says, hey, you only bought them 6 months ago. We can only give you 75% of the cost that you've put in so far. So for whatever you purchased them for, and then how much rehab did you invest, and therefore we can lend you this much, because you haven't gone through the required seasoning period where we can actually assess the new value, the real value, I would say, to the properties, and then we can work off of that value. So I don't want to go too much into the seasoning requirements. They do vary from lender to lender, from program to program, but just know that they may be there when you're applying, and you gotta understand those, and you gotta look at those to see when it makes sense to move into a portfolio product. And one thing I'll add there too is you can sometimes, we've certainly done this in the past, where you may have some really new properties in that portfolio, and you simply just pull those particular properties out, and then it makes sense for the rest of the portfolio because those might have been purchased longer ago, and then you've overcome the seasoning requirements. Hope that makes sense. These are typically underwritten to a debt service coverage ratio of 1.25. And again, just to go over that debt service coverage ratio for anybody that doesn't understand that or doesn't know what that is, it simply just means they're going to take the entire income of the whole portfolio. Again, let's say you're looking at 10 properties. They're going to add up all of the rents collected in those 10 properties. They're going to come up with a number. They're going to figure out what normal expenses should be coming out. They're going to take the expenses, or they're going to take the total income and subtract the expenses out, That's going to leave you with a number. That number is called the NOI, net operating income. And inside that number needs to be enough money for this particular payment, with 25% left over for cash for you, which is why we like debt service coverage ratio loans. It protects you so that you're making money. You always know you're going to be profiting from, once you've taken out this loan. And it also protects, of course, the lender, so they know that there's enough money coming in from these properties that's going to make sure that they get paid every single month. So it's a great way to kind of police, if you will, who can get what loan and how much loan you can get in any given program. These typically come with a minimum credit score of 660. Again, that's only a rule of thumb. I wouldn't let that dissuade you from applying or looking to see what your options are if you think your score might be slightly lower. But just again, there is a credit score requirement typically in a portfolio loan. They do have loan minimums typically, and the lowest I've seen is $500,000. I don't typically see a loan max, but that loan minimum is something that is typically found in these portfolio loans. And then a minimum unit value also. And this you don't really see if you're looking at a bunch of single family homes, let's say. Where we do see this minimum unit value come into play is if we're doing something that involves a multifamily or an apartment building. And I've seen this happen in the past where you take the whole value of the property of the multifamily, then you divide it by the number of units. And sometimes I've seen them as low as $20,000 per unit inside the building, right? And so in that particular case, those units wouldn't qualify for this blanket loan. It's just a way they kind of weed those out. And if that were the case, you would want to look at a different loan, a multifamily loan, instead of a portfolio loan. But once in a while, you'll see a portfolio that includes, a bunch of duplexes, and then maybe they have a 16 unit that's as part of that portfolio. And they want to put it into one single loan. It will work if you have a greater than $50,000 per unit value inside that multifamily. Again, if that makes sense. So again, typically you're going to get excellent rates and terms inside the portfolio loan programs. I think our best product right now is a 30-year loan with a 10-year interest only available. It's an excellent loan product. Everybody wants it if they qualify for it. It's just one of those products where you can sort of throw away the key. You get one loan payment, one closing, and that one closing essentially leaves you with a lot lower closing cost overall, as opposed to if you did them all individually. All right, so that's pretty much it. If you think you like this product, or if you want to see if you might qualify for it, or if you know somebody that you think might qualify for it, just click on the link below. The link below will take you to a little form. You can fill in the form. It asks for some basic information that comes directly to our office. Someone will get right back to you, and they're going to ask you for your real estate tape. Now, if you don't happen to have a real estate tape, or you may have a schedule of real estate owned, let's say, I would still ask us for a template. We'll provide it upon request. And that the reason I say that is because the real estate tape, it's called tape for a reason. It's not a typical schedule of real estate owned. What a lot of people will do is they'll send us their schedule of real estate owned, and we have to kind of kick it back and say, yeah, that's great. I appreciate that, but it doesn't give us enough information for the portfolio loan to get qualified. And it's just more information about the property itself. It's fairly detailed, actually. So if you don't have one already, we're happy to send you one at no cost. Just send us a message and we'll get that right out to you. And then we can get you pre-qualified also at no cost. And I think you might be pleasantly surprised, I would hope. And with that, we're at the end. So I want to say thanks so much for listening. As always, please subscribe. We've really appreciated everyone jumping in and subscribing. Gotten a lot of great feedback so far on the channel, so I appreciate that. And like I say every time, if there's something in here that you want me to talk about, let us know, and we're happy to consider everything. So I'm hoping this is helping everybody, and we will talk to you on the next video.